What's up, Tim Sykes here with Tim Grittani. Thanks for joining me.
Of course.
This is like, what, our fourth round table? Fifth?
Fourth or fifth, yeah.
I don't know.
We've done a lot.
We do these things because we just talk. There's no script, there's no planning. We just talk, and you can learn from our experiences. I think that you can learn a lot from his journey and my journey, and we see things a little differently, but there's no one magic right formula in this game. Do you agree with that?
Oh, for sure, yeah. I think I've said it before. Like, I'm always amazed how every successful trader I know, no two do things the exact same way. Like, everyone has their own favorite setups. Like, there's no secret formula. Like, you find what works for you and you exploit it.
And this is what makes trading so difficult, and teaching trading, because Tim Grittani can show you everything that he's done and you just might not get it. I'll show you everything I've done and you just might not be like, this is weird. Like, he is primarily a short seller these days. I used to be a short seller. I've gravitated towards buying. He can't really buy that well, dip buys especially.
We've had opposite journeys, because I started off almost primarily as a buyer.
Yeah.
And now I've gravitated more and more towards the dark side, as you'd say.
I mean, I can't stop Anakin. We know how it turns out, so it stinks. But no, it's not bad to be a short seller. It's not bad to be a buyer. Why do you think people have misconceptions where they're like, you trade penny stocks, you should never buy it, all the fundamentals are terrible?
Well, I mean, they're right that all the fundamentals are terrible, but the horror stories you hear are people who buy them like lotto tickets.
Yeah.
Who say, who believe in the technology, really, who think whatever the story is, that it's actually going to go somewhere.
So I think it's okay to buy penny stocks as long as you know the reason why you're buying it, as long as you have a plan. Don't just be like, oh, I hear this company has good technology, let me just buy it, maybe it'll work out. That's the wrong way to buy. But if there's a multi-month breakout with a catalyst, with strong volume, maybe there's 5 newsletters promoting it, that's not a bad time to buy for a trade. You just have to differentiate between trade and investment.
For sure, yeah. I'll buy those, no problem. But I always have the mentality of I'm holding a grenade, and I better get rid of it before it blows up in my face.
I like that. So think of every penny stock as a grenade, and especially short sellers, they love it because they're waiting for the grenade to explode.
For sure.
They can't wait. They're like, pull the pin, pull the pin. Why do you think most people have problems with short selling as opposed to buying? Most beginners and newbies really favor buyer.
I remember I felt like it was really complicated at first. It's just a weird concept to wrap your head around. You're selling before you're buying.
Yeah.
And, I really tried to think too hard about it, and I eventually got to the point where I was like, okay, you know what? I'm just going to click this button, and all I need to know is that I want the stock to go down. Yeah. And I kind of simplified it for myself a little bit. And you probably do want to get a little more into the details eventually, but at first, that's about the extent of what you need to know as far as execution is concerned. And then just remember to cut your losses, because if you are a stubborn short seller, it might not happen today or tomorrow or next month, but eventually your account goes boom. So
this is a big thing where a lot of short sellers say, okay, every penny stock goes down, why not just short and just hold it? Because you gave an example the other day. We're here in Rome. We're teaching some students in person. If you want to learn in person, email admin@timothysykes.com. But you basically said, look, if 99 of the 100 penny stocks go down, right? That one that doesn't, and you keep averaging up on your short, you blow up. All it takes is one for you to blow up. So even if the situation works again and again and again, that one time when you're risking too much, when you keep averaging in and you keep taking a big position, that's all it takes for you to lose everything.
Mm-hmm. Yeah, it's funny. I can't remember the ticker now what that one was, but I remember the prices. It was 350 was high a day.
Yeah.
And I thought it had put in a lower high. I short sold. And then it started to break past 350. I was out at 351.
Yeah.
I am not playing around in that situation, day one of a runner. And it ultimately did top out at 370 and then fade back off all day. So the problem that I got into when I first started is I would kind of see that happen, more times than not, and that reinforced the bad habit. Yeah. So I was like, oh, I'm so smart. I'm not cutting the losses and I'm getting a gain later. And then, what was maybe 6 months later is when my reckoning came on Lake, and that was, we've talked about it a lot, but almost negative 300,000.
Well, a lot of people don't know your story. Just give a brief overview of what you've done, because I know your story. A lot of people do, but some people, they're just finding you and they're like, why should we care what you have to say?
Okay, yeah, brief overview is started first trade was May 2011, $1,500 of my own money, but I had money borrowed from my parents to keep other accounts open. I was under pattern day trader rule. I wanted as many day trades as possible. So I had 3 brokers open, 9 day trades per week, But the agreement with my parents was I only take $1,500 positions, or whatever my current amount of the accounts are. Like I can't actually trade their money. It's just there, so I get more day trades per week.
Gotcha.
And in the first 6 months of trading, up until November 2011, I had blown up my 1,500 once. I had to refund. And I was just really struggling. And then
6 months of nothingness, just for those of you
and I had studied 3 months of video lessons before that. So, February 2011 is when I got into your silver.
So people who think that like, oh, it's going to be so easy. The man took 6 months to screw up.
Yeah, and so it was from watching my first video lesson to like, okay, I feel like I'm starting to get consistent. That's 9 months. And when you're starting to trade, especially if you want to start full time, you've really got to think, like everyone's different, but like go in with a conservative estimate of like, can I go a year without making money? Like that's, and maybe even losing money. So
well, when did you, because you were silver and then you joined the challenge. When did you join the challenge?
Challenge was like August 2012.
Okay.
And at that point I'm like at about 100K.
Okay. So you learned a little, you practiced a little, then you joined the challenge. Was the challenge helpful for you?
Yeah, it was. It was cool. I especially liked Good's webinars because back then I was buying pumps and that was something that Good had done videos on and gotten really in depth into. So like I was already like pretty good at buying pumps, but it helped me take some things like a step further.
And the challenge, FYI, has changed a little bit over the years now. You get 2 to 4 webinars every week. Tim Grittani every now and then does a webinar. Mark Crook does webinars. Michael Good does guest webinars. I do webinars. So you're building on a lot of knowledge. Stephen Ducks, who just passed 2 million in profits, actually said that it's easier to learn now because he has so many different strategies to learn from. This was when we first started, so you didn't have that many people. You didn't have that many resources. Have you seen how like the challenge has changed a little bit? Like the challenge chat room is really useful. I think.
Yeah, challenge was growing. Like back when I was starting, like it was like basically you and Good, and Crook a little bit, but. Like I was, I also like branched out into other services early, and I was trying to just like learn everywhere. And most of them I learned like nothing at all. But like I was able to take like little bits and pieces from multiple different strategies, and
that's the key. Sorry to cut you off. It's so important to learn from everybody. Like because there's no one magic formula, you have to piece stuff together. And you might say like, oh, I don't like this guy's strategy, but then you start getting used to it. Like we both changed. You were primarily a buyer, now you're a shorter. I was primarily a shorter, now I'm a buyer. You evolve and you adapt and you see what feels right over time. So don't feel like you have to trade any one way and you have to stick with that strategy because the market is always changing and you can always be changing.
Yeah, I always say let your results guide you. Like it's great to try a lot of stuff early, but you've got to do that with small size. Like don't try a bunch of stuff early and lose 10 grand. Like that's insane. Like I tried a bunch of stuff early and I lost 1,500, and that's like a very recoverable amount. Like I had worked a summer job and made like 4 grand that summer. So like, I didn't even lose my summer earnings from State Farm. So
this is a good point because a lot of people say, okay, how much should I trade with at first? And I think in Bali you said, what was it, 3,000? We did a 3,000. I think it was 3,000.
Yeah, I'm to the point now where I don't even like to give a number. I just, it depends on you. It depends on your life situation. It depends on what you can afford to lose. But I really believe keep the losses as small as possible early because then you learn where you're succeeding, where you're failing, and then you can really hone in and attack the one area or 2 areas where you're the best.
I know this isn't exciting information for you guys. You're like, I want it now. I want to go big. And we're like, calm down. Look at his shirt, okay? Look at his shirt. It says chill out. That's how you have to be, especially in the beginning. You have to chill out and just let the plays come to you because you have to understand, like, we're trading penny stocks. There's not a perfect play every single second. So if you're learning to trade, Facebook or Amazon, you can trade them every single second because there's volatility, there's pricing. I don't recommend that. But with penny stocks, you have to wait for these really solid supernovas, these solid opportunities that don't come about every single second, every single minute, every single hour. So a lot of your studying is not just what's happening in real time, but studying from past setups. Have you studied the past a lot?
Oh yeah, absolutely.
What do you talk about your spreadsheets for a second? Because he's always doing his spreadsheets. I don't do spreadsheets, but he does.
My spreadsheets, I basically do them just to try to answer questions. So like, for example, when I first got into NASDAQ trading, I had no experience there whatsoever. I had no idea what to expect. And I knew that I wanted to trade the most volatile ones though, like I kind of have been doing with penny stocks. So I just start, by asking a question. Like I would take the top percent gainers every day from, listed stocks, maybe that were up 20% or more. And the question I was asking was, how do these perform the next day? How do they perform on day 2? And I wasn't even looking for a setup at this point. I just wanted to answer that question.
Cool.
And that basic tracking showed me that the vast majority of the time, day 2, was a weaker day, although there were exceptions. And from there, I could take it a step further and then start trying to look for specific strategies, based on whether the stock had gapped up or down the next day. And, there's just a million different ways you can go.
So you're creating a hypothesis and then you're testing it.
Yeah, by the end. I mean, it's more like I'm asking questions and then trying to find answers to these questions to form a hypothesis.
Whoa, my bad.
It's good.
I think that's really good. And I think that a lot of people don't really get that. They're just like, give me a hot stock, give me a good pattern to memorize. We get questions all the time, like what % down do you need for a stock to be worth a dip buy? And I'm like, it's not like a specific percent. Like there's different kinds of catalysts, like earnings winners, pump and dumps. What's the overall market doing? What's the float? How much is it trading? What time of day is it? Just explain like your most commonly used indicators, your top 5 indicators. He has a whole DVD, by the way, called Trading Tickers, where he explains everything. I highly encourage you watch it. I'll post a link just below this video too.
Okay,
explain some of your favorite
indicators. I would say major daily resistances on a daily chart. Yeah. So like I'm looking back on the daily chart. It's a candlestick chart.
How long do you look back?
At least a year.
Okay.
But I'm looking back and I'm looking for days where there was huge volume, unusual volume spikes on the daily chart, and where the stock failed on those days.
This is actually an important point. Sorry to interrupt, but if you're looking back at key points, you want a lot of volume at those points.
For sure.
So if a stock just hits a random number in the past, but there's really little volume, it probably isn't that significant because there's not a lot of volume. There's not a lot of people that cared about that number. But if there's a huge volume day and there was a day high, like that number really kind of sticks, I think.
Yeah, other than that though, like it's basic support, basic resistance. I don't really get into many in-depth indicators. Like I dabble with VWAP a little bit, which is value weighted average price, I believe is what that stands for. But it's not like a huge part of my trading. It just kind of helps me form a bias a little bit. And then previous closing price, like green to red, red to green.
Why do you think so many people complicate things with, I've heard of like 200 different indicators.
Oh, there's a ton, yeah. And I think everyone is just looking for something extra that will give them an edge. Yeah, the silver bullet. And I'm not going to say it's not out there because I've barely looked, to be honest. Like, again, it comes back to what works for you.
Yeah.
So it's cool. If you want to try out lots of different indicators, definitely, by all means, do it. But I wouldn't try out like 5 different indicators at the same time. Just take them one by one and start to get a feel for what is working for you, what you're comfortable with.
You got like Bollinger Bands, RSI, MACD.
Moving averages, yeah.
Fibonacci retracements, Ichimoku clouds. There's so much stuff. I will say that the Fibonacci retracements, it's like 38% off the high. Those actually do work because I think that there's so many like Fibonacci freaks out there that people value it. A lot of this is a self-fulfilling prophecy. So if enough people believe like, okay, stocks breaking out to 52-week highs, there's a lot of traders who just buy that. So if everyone is buying that, that pushes the stock price up. So you kind of want to know what other people are looking at because that can influence the price. I will say though, with penny stocks, this is kind of a little trick where a lot of people see something pop up on their scans like 52-week high or day high, but it's only like by a penny or two. It's not a convincing breakout. And with penny stocks, for me to buy a breakout, I need convincing because I get faked out a lot. There's a lot of fake outs. The other day, I was buying CHOOF. It broke out by 1 or 2 cents over 3 months, and then it came right back down. It was a fake out breakout. So how convincing of a breakout do you need before like buying?
I actually don't need convincing because I've tracked breakouts enough and I'm comfortable enough with breakouts where I'm just taking my shot. Like if it's giving me the, and let's be clear on what breakout is. Like when I say breakout, I am talking about like a past daily level that's significant, like a big multi-day breakout. Like I don't consider a breakout like, oh, it's breaking out past the morning's highs.
Yeah.
Like, okay, maybe there's some kind of play there, but that's not the one where I feel like I have the major edge. So if I'm getting the breakout I like, the multi-day breakout, I'm taking a shot. Like I've tracked it enough where I know exactly where my risk should be. I know exactly what I'm looking for, how to handle it. And I feel like, even though I'm going to lose some of the time on them because no setup works 100% of the time, I will absolutely come out ahead over 10, 20, 30 times playing it.
Why did you not buy CHOOF the other day? Because that was a multi-month breakout, but it was also midday.
So CHOOF had a couple things going against it for me. One was that I had been playing it last month when it was trying to break out past the dollar area. And I think I had a couple trades that were break-even-ish on it and then one loss. So it had already frustrated me, and I'd already seen like, wow, this thing really kind of sucks on its multi-day breakout attempts. The other thing was that the nature of how it got to this breakout. It had like opened the day at 90 cents and basically run straight up to the $1.10 breakout level with no pullbacks at all. So that's not really my kind of breakout. Like I have also seen that, like the ones that have the big straight up spikes into a multi-day breakout level usually fail the first time. So I was willing to let it have its little midday multi-day breakout attempt. My plan for that was to not attack midday, and if it had held back, or if it had held together on a pullback, consolidated, and then retested that, I think it was a 113 high that it set, you know, then sure, I'll go for it. But the first attempt there on a straight up spike, not really my thing.
So I forced that trade a little bit, it was my bad, but I controlled the losses. I lost 3 cents a share, roughly $600. The next day, I made 3 times that, nearly 2,000. So if you control your losses, guess what? It's not that bad. They can be made back pretty damn quickly. The problem is when people say, oh, I'm in this stock, I might as well give it more time, I might as well, you know, maybe I'll even average down. Like, this is the worst thing, when you guys see a breakout and it fails. So let's say, just for example, CHOOF, you see it fail at 110, it comes down to 104, and you're like, well, it might not be a big breakout now, but let me buy it at 104, get my average down to 107, then I can escape if it gets back to 110 and you make a penny or two. Why do you think people like to do that?
Because there's a certain thrill that comes with fighting a stock like that, turning a loser into a winner. And that was another one of my problems when I took all my big losses. Because you get a rush out of that, you really do. You feel like so smart after. But again, you know, it might work 90 times out of 100, but you know, 10 times you are gonna lose your ass.
And it probably won't work 9 times out of 10.
Like
it'll probably work
probably
like 30 or 40%. So some of you guys do that and you're like, Tim Sykes told me to cut losses, but I didn't cut losses. Now I made it back. Fuck you, Tim Sykes. And I'm like, but
you learned the wrong lesson.
You learned the wrong lesson, and then they lose it big the next time. So they make like 1 or 2 cents, then they lose like 10 or 20 cents the next time. So there's ways to make money that are good odds, and there's ways to make money that are bad. And I know that's confusing when you're beginning. You're just like, no, it's just making money. Like I get messages like, you just like to lose, you know? And I'm like, no. I like to minimize my losses, and I like to take high on setups. The multi-month breakout, especially on OTCs, I think works very well. One of my students, his name is Michael. He's an NFL player, and he has gone from negative, I think he was down 3,000 when he first began. Now he's positive 5,000. That's his pattern. Why do you think OTCs work so well with multi-month breakouts?
I think they're a little bit less tied to the overall market, like, you know, whether the Dow is up or down on the day and stuff like that. I mean, OTCs really are just pure technicals.
Yeah.
So.
No, I agree with that. And I like buying the first green day or like a breakout on an OTC better than a NASDAQ, because like OTCs with momentum and volume, like they can really run. Like they're so speculative. They're such like junky companies. They're not even like real, like legit companies. So their stock takes a little longer. Like CANN, remember that one? Like it can just go up for like 3, 4, 5, 6 days in a row and like double or triple. Penny by penny, like they're building the bid, they're building the ask. It's a beautiful thing to watch when you're long.
It's fun.
Like especially at the open the next day where someone's trying to buy, because the thing with OTCs, executions take longer. So if somebody really wants to buy, so let's say there's 500 people who want to buy an OTC stock right at the open. They can't get executed. On a NASDAQ stock, they'll all get executed within a few seconds. If there's 500 people who want to buy an OTC stock at the open, it might take 5, maybe even 10 minutes until the last guy gets executed. And meanwhile, the market makers are just gradually walking the price up.
Yeah, especially if those buyers are using market orders.
And most people do, because a lot of OTCs, they're being promoted. They're just, you know, being basically promoting like a story. So they're very, I think, bad fundamentally, but very good for trading vehicles if you know how it works. It's very dangerous if you're in an OTC overnight and let's say there's bad news and everyone is trying to get out. If there's 500 people trying to get out and you're one of them, you're not going to get out. So you have to be very careful holding an OTC overnight, I think. And if there's like a tidal wave of sellers, like you probably get like at the bottom or towards the bottom. Have you ever done that? Have you ever been stuck in an OTC?
I have, yeah.
And how much did you lose? Like what percent?
Well, I've been stuck in halts twice, and those were like 80% losses.
But halts are rare.
That's different. That's different. It's funny actually. I was telling this story at the little meetup the other day.
Inner Circle.
Inner Circle, yes, Inner Circle. That's right.
Post the link just below if you want to learn in person at my Inner Circle too.
One of my early losses that kind of was like the beginning of the end for that first $1,500 account of mine. I had been basically playing promotions overnight for gap ups because I was tracking awesome penny stocks back then, and like every time they had a green candle, it would always gap up like 3 to 5% or more.
Yeah.
And so I got in this habit of buying these awesome penny stock pumps, selling them right at the next morning open, and making a few percent. And I was like, okay, this is awesome. This is fun. And I hadn't really learned the lesson yet that not all promoters are created equal. So I had bought some random promoter who had a green day, and instead of gapping up the next morning, they gapped down, and it had so much less liquidity than an awesome penny stocks pump. So I got stuck in the panic. I lost $250, which at the time was my largest loss ever by far. And it was just like an enormous gut punch. But yeah, I mean, it happens, and it can be really frustrating trying to sell into weakness.
I just thought of something. You were explaining your story when you started with 1,500 and you explained it. I got off track. How much are you now currently up as we're doing this interview?
This week I passed 6.7 million.
In profits, from 1,500 of your own money, some money borrowed from your family to get to like 13,000 to open brokerage accounts. How do you think other people can achieve this over many years?
I mean, you can't rush it.
It's damn tough. Okay,
yeah,
I don't want you to think,
tough.
I can make 6.7. I've only made 5 million.
I think part of what helped me is I didn't have a goal in mind. I wasn't like, oh my God, I'm going to be a millionaire by next year. Like I was just taking it a day at a time, a trade at a time. I like my goal was just to be able to do this for a living. Like I didn't care if I was making 100 grand a year. Like I just wanted, the freedom that came along with it, and to not go back to working 40-hour weeks in an office and being bored to death.
I mean, I see that you spend a lot on your clothes though, so you have to really make enough money to afford that. I mean, this is a custom Mickey chill out shirt. I saw this at one of the tourist shops. I think this was like €8. So you obviously had some goals to afford such designer clothing.
Yeah. Obviously, clothing is very important to me. But aside from the patience, what really helped me was, you just talked about Michael. Like I think it was him who said like it seems so counterintuitive, but like, the less he traded, the more he started to make.
Michael Good or Michael Huddy?
Michael, ex-NFL Michael.
Oh, okay. Or Michael. We have a lot of Michaels in a lot of teams.
I think he said that, and it really echoed my thoughts so perfectly, because that was my turning point. Yeah. Where I did have all that time trying to trade 10 different setups, and I blew up my $1,500 account. Yeah. But I learned from it, and I was able, from all that over trading I did, I still was able to see, okay, I'm doing well with this setup, and okay, I'm getting killed at short selling, so let's just cut that out for now and not short sell anymore. Yeah. And I focused in on the two I was best at, and that was it. Like I would go 2 or 3 days without making a trade, and that was fine with me, because when my pattern came along, I was ready and I attacked. And did it always work? No, but like it worked more than it failed. And that's what dug me out of the hole, and then that's how I was able to start leveraging up and scaling up my position sizing. And it's just been really just doing that process over and over again with different setups, trying different things. Some things work, some things don't, and cut out what doesn't, stick with what does, and push it as far as you can.
How do you think people can be more selective? Because everyone says, be selective, wait for the best setups. How do they find what the best setups are?
I mean, the best setup, for me, it's all pattern based. Like, I mean, catalyst matters a little, but I don't go into a morning saying, this stock said it won a contract, I'm gonna buy it because of that news. No, I look at the chart. Like I know, okay, this stock said it won a contract, but then I see what the daily chart says. I see what the float is. I see like a number of technical things that tell me whether there might be a trade there or not. You have to understand what the setup you're trading is. You have to, like every single person I think should have a journal of their trades. And say, it doesn't have to get that in depth. It doesn't have to be anything crazy, but just say how much you made or lost, what the date was, what the ticker was, and what was the setup you were trying to trade. You have to be able to answer that question. What was the setup I was trading? And then, after you've traded for a month or two, you can look at this nice history of trade results of yours, and you can see specifically which setups are you best or worst at. That's how you figure out the best setups for yourself to trade.
So they just need to test.
You need to test. You need to test, and test small so that you don't kill yourself early when you're doing this.
So this is it. So what do you think? I mean, obviously testing, tinkering, refining. what do you think people do the worst in your experience? Because a lot of people ask you questions. What's like the biggest problem that they have?
Getting discouraged too easily, honestly. There's this conception out there that if you take a loss, you did something wrong.
Yeah.
And that's not true, because we've said it already during this sit down here that sometimes setups just don't work. There's a huge difference between, oh, the breakout failed and I had to cut the loss, and oh, the breakout failed and then I held and then I added and then I held longer and I took a loss 5 times as big as it would have been if I had just cut when the setup failed.
So there's different ways to take losses. Some losses can be good. I know this is going to get a lot of blowback. Some people are going to be like, you're just a loser, that's why you like losses. But sometimes you're going to be wrong. And if you accept that and you minimize the loss and you lose 1, 2, 3, 4 cents a share on like $1 stock, it doesn't matter. You can make it back so quickly. It's that stubbornness when you refuse to have the loss because your ego doesn't want to. Let's say some people get on streaks like, oh, I've won 7 trades in a row, or I've won 18 trades in a row. Your streak doesn't matter. Your streak does not matter in the long run. It matters how much you make over time, not streaks. I would rather win 50% of the time and make $10 million than win 100% of the time and make $100. Okay? There's some people, they're like, I'm perfect. I've never made a loss. But is it scalable? Is it repeatable? Can you actually execute these orders? Like, especially if you make a lot of money on paper trading, like, oh, I just short sell all of these. On paper trading, you can do that. In real life, you have to find the borrow. Sometimes when you do find the borrow, it keeps going. You have to pay daily fees for those borrows. That adds up. So short selling is a lot more difficult in real life than on paper trading.
It can be, yeah.
What do you think about paper trading? Should people do it?
I don't like it. I really don't. I think you're a lot better off and you're going to get so much more value out of trading real money incredibly small. Because paper trading, there's no emotion at all. Like when you actually have something at risk, that really makes it real trading.
I agree with that. So I talk with a lot of people and I say, look, trade with 100 shares or 200 shares. You're not going to make anything. You're not going to lose much, but at least you get in the habit. And paper trading is good, I will say, for people who don't have any money. Like some people are like, I just have no money, I want to learn. So that way you can still practice, even though it is only a partial education, but it still gets you in the game.
Well, you know, if you're going to do that though, like get an actual paper trading software. I know there's some brokers that offer that. You know, like before I started, you know, that 3 months I was watching video lessons. I was like the classic example of a bad student at first. Like my idea was I wanted to follow your alerts. Like I was like excited by the idea of like I can just buy when Tim buys.
Never follow my alerts, never follow anybody's alerts. You must be self-sufficient. I share the alerts to help you plan in real time.
So I sort of mentally paper traded your alerts during those 3 months. And I would like track it in a spreadsheet. So I wasn't actually even pushing any buttons, having to deal with getting real executions. And I think I was 6 out of 6. Like it was incredible. And then real trading hit, and I was down a couple $100 really fast.
Don't follow alerts from anybody. This is so important. But at the same time, don't ignore alerts. I share them with you because I also have learned that they are the best tool for helping you plan in real time. You need to come up with your own plan. And to see it in real time, because it's not just about the alert for me. Like I set up a watch list, I do commentary. Usually my trades are predicted ahead of time in the chat room. I'm like, if this stock crosses this level, I'll be buying. If this stock, you know, has a first red day, I'll be shorting. It's all about recognizing the patterns as quickly as possible as they're playing out. It does me no good, it does you no good to be like, oh, I saw that 2 days ago, you know, I knew what was gonna happen. And then you're like a hindsight trader. A lot of people think that like trading is so easy and they're just, you know, judging based in hindsight. Can you do it in real time? Can you see the play ahead of time? That's what I think is best about you, where a lot of the time, like you are, you know, planning this stuff ahead of time and seeing how the trade plans out, and then guess what? You can execute. Because if you see ahead of time, you can execute in real time.
Yeah, because like that is one of the hardest things, because you learn about multi-day breakouts, let's say, and you are seeing a chart at the end of the day and how it played out. You're seeing that entire day in an instant. Whereas when you're buying a breakout in the moment, you might have to sit through an hour of choppiness. Like you're not used to that. You're thinking it's a breakout. It should be like I should be up a lot of money, and it takes time. So that real-time experience and actually seeing what it feels like for a pattern to play out, like that's just so valuable.
What about also, like you mentioned during like the choppiness of a breakout, like how do you, I mean, I'm just fair warning, I'm not good at holding through the choppiness. Like I look for that quick breakout. If it doesn't give me the breakout, like I'll take a loss of 3 cents like I did on Choof, or I might sell for like a penny or two, and then the stock will run. How do you hold through that choppiness? Teach me too.
Okay, I mean, like what, again, this is where tracking comes in so handy because so early on I was tracking breakouts. That was one of my first like really solid setups.
Yeah.
And I had learned that from one of your DVDs. I'd seen it in your video lessons, like because it was one of your it was that one. It was one of your favorite setups at the time. I think it still might be.
Yeah.
But you had always said, oh, and so the stock breaks out and then the resistance becomes support. And I expected that to be perfect. So I found myself getting shaken out of a lot of plays. Like, maybe I buy a stock at $1 on a multi-day breakout, and then it pulls back to like 98 cents. And I'm like, oh shit, it's under that dollar. Like, it's failing. Resistance didn't become support. Yeah. And I cut the loss, and then it runs off without me. So I tracked these for a while and started to see like there were so many succeeding that didn't perfectly hold, the original breakout level. Yeah. They did tend to shake just a little bit below the level and then continue onwards. So that tracking helped me see like, okay, I'm not using a good risk level. Like I really should probably risk off of like what was the previous intraday support before.
Gotcha.
And so that tracking gave me the confidence to be patient and be confident that I'm using a risk level that makes sense.
So this is what Tim Grittani does so well. He cuts losses intelligently as opposed to me. I cut them quicker. I cut trades quicker than, I don't think, do you know anybody who cuts trades quicker than me? Like
I don't think so.
Like a solid trading plan. But for me, I think that's good for newbie traders, because you do have some, bigger swing losses, and some much bigger swing gains. Like,
for sure.
You must be willing to lose, 10% sometimes, 7%?
Yeah, like I honestly don't even think about the percent. Like I'll never be sad that I took a 20% loss. I'll be sad if I took a larger dollar loss than I was supposed to based off of my risk.
But at the same time, taking a 5, 10, maybe even 20% loss opens the door to 100, 200, 300% winners. How long did you hold CVSI for?
2 or 3 weeks.
And what were you in at on average?
I was in at like 96 cents, I think.
What'd you sell it at on average?
I sold it at 235 maybe.
So he more than doubled his money holding this stock, CVSI, which is a sketchy ass stock, okay? Big time patience. How much did you make on that trade?
That was 212,000, I think.
So I would never have done that. And that's, okay. Like that's not a play for me. I might have bought the breakout like one day and like made like my 10 or 20%, but he held on for like, what is that? 140% gain, 130%?
Yeah, but that was a really unusual trade for me. And like that was actually one of my rare ones where I had some fundamentals I was factoring in rather than just the chart setup.
Yeah.
Usually on a breakout, my patience is like a max of 2 days.
But you still have the patience. Give yourself a little more credit.
Okay.
You got a $250,000 nearly profit on that. So that's worth it. When should people not have patience?
When your risk level's breached. And this is again where tracking comes in, because if you track your trades enough and see enough times, oh, my risk level got breached, and then the trade went in my favor, then that might tell you something. That might tell you you're not setting smart risk levels. So then you adjust, and then you do start setting risk levels that are a little bit smarter. But the second that risk level is gone, you're out. Like that's how it's got to be. And that's exactly how I trade now, because you might get away with it every now and then if you don't do that, but you open the door to catastrophe, and those losses are just so emotionally devastating, financially devastating, and I just never want to put myself in that position again.
And just to quickly explain, how much did you make roughly in the past week since we've been here in Italy?
Well, since we've been in Italy, we've been traveling for like 2 weeks now.
Since we've been here in like the past 5 trading days.
Okay, past 5 trading days was like about 110,000.
In profits.
Right. And I had a red day on Friday. Friday was like minus 2,500.
Okay.
So like a little red day, but like it's great. I'm cutting my losses and I'm not giving back my week.
And I think it's important to note that even when Tim Grittani is trading, you turn off your profit and loss column. Mm-hmm. You don't want to see it because you just want to focus purely on the chart, purely on your risk levels.
Right.
If it breaks that risk level, then you're out. If it holds on to it, then you're going to give it patience.
Right. But part of the reason I can do that too, though, is because I'm thinking about when I'm buying the stock or shorting the stock, how much size I'm taking. Like I have an idea of how much I lose if my risk level's breached. So I'm not just like completely ignoring it. Yeah.
Like, I gotcha.
Yeah.
What's your risk level?
My risk level is based on a key resistance or support on the chart.
No, I mean dollar-wise.
Oh, dollar-wise? Most trades, $5,000 max.
Okay.
There are some really special ones that come around every now and then where I'm willing to go bigger, like 10, 15, 20,000. But those aren't very often.
But just think about this. For somebody who has made millions and millions of dollars, his maximum risk level is,
usually 5,000.
Arguably a few $1,000s.
Yeah.
So just think about that for a second, because a lot of you guys have like $10, $20, $30,000 accounts, and your risk level is losing $5,000, which is wrong. You should never risk losing 30, 40, 50% of your account on one trade.
And I see confusion about this. Like, risking $5,000 for me doesn't mean I'm taking $5,000 positions. It means if I stop out of this trade, my loss will be $5,000.
Gotcha. But why do you think people are so aggressive with their overall account?
I think early on you just want to make more faster. Like that really, I was aggressive early. Like I kind of told myself I had to be, and that just wasn't true.
I used to go all in, so I'm not the best guy to judge. I would never tell you to go all in these days. I have become very conservative in my old age. I think that you can get aggressive later on in your career, like you're, year 6, year 7 of your career. You've seen a lot of plays. You've experienced big gains. You've experienced big losses. You've been around. When you're first beginning, you just don't know how fast these stocks can surge if you're short, and you're not comfortable with how quickly they can drop if you're long, especially if you're long in OTC. So you just can't judge properly, and that, I think, opens the door to bigger losses, confusion, frustration, disappointment, the whole 12 steps of depression.
For sure.
That's what you're opening the door to.
Yeah.
And it's not because the market is bad, it's not because trading is bad, it's not because this is a scam, it's because you have the wrong preparation, you have the wrong perception. Right. How do we fix that?
We can only do so much. Like, we repeat this, I think, every time we sit down together.
We do.
Like,
in a different location. So we have done interviews. If you search interviews, we did one in Vegas. We did one in British Virgin Islands on the yacht.
Yeah, that's right.
We did one in Bali. We did one in, where was that other, not on the yacht, but on land. Where were we in St. Martin?
Yeah.
St. Martin. And then we did another one some other time. I lost track. So we're doing this all over the world. Literally, we go all over the world. We're very fortunate. We did one early on in the Maldives when he first passed 100,000. So we've done this in 7 things. The rules don't change, okay? It's kind of cool. Like, maybe we've refined them. Maybe we've followed them better. Nothing really is new here. Like, you're not learning something new. That's why some people are like, is a video from 2 or 3 years ago still relevant? Yes, it is. The rules don't change. But how do I get through to these people more? Because you see that it's frustrating. You just stopped answering DMs.
I overwhelmed myself.
You gave up on the human race.
I didn't give up on anyone. No, it's just that I started thinking more about how I want to spend my time outside of market hours.
Stop fucking bothering this guy. He's already busy enough. He's trying to make more money. I want him to be more successful. Ask me. Pile the questions on me. I have a team. I'm already insane, so I have no sanity to lose.
One question I get a lot that frustrates me is how do I be more disciplined? And that's something that neither of us can tell you. That is completely internal. Do you agree? You've got to take it upon yourself to, do the right thing over and over again. Yeah,
we can teach you the rules, we can teach you the chart patterns, but it's you're the one clicking the buttons. It's up to you. I'm not going to come to your home and be like, here, push this button right now and hold your hand. You need to internalize this. You need to take all this in, maybe take some notes, and then employ it and put it into practice.
One thing I guess I can say that helped me, when we were talking to the students the other day, I was talking about how that early point in my career when I lost the $1,500 and refunded, that sucked, but it wasn't really that low of a moment for me, or I didn't really take it too hard because I felt like I had an idea of how to move forward. And I was saying that the lowest point in my career was I literally had about a 1 year span. I was already up a couple $1 million at this point, but I had about a 1 year period of time where I netted out to break even because I was going through this cycle of a few profitable months, lose it all in one big loss. A few profitable months, lose it all in one big loss. And that was for me my lowest moment and my most frustrated I've been with trading because it was a discipline issue, and it was a mistake that, you know, I thought one $290,000 loss would teach me my lesson, and I would never do that again.
Yeah.
And I did it 4 times.
Yeah, yeah.
Like, and
but
that,
your
and
losses,
that was like,
your losses reduced every time.
Well, they reduced, but it was still the same mistake, and it still was happening, and it still was way more than I should be losing on a trade. And I felt like I was like, oh my God, like, where's my self-control? How do I keep letting this happen?
Yeah.
So I guess, like, if I am gonna say like one thing that could help with discipline and what helped me was trading psychology books. I read The Daily Trading Coach by Brett Steenberger. Fantastic book. And the key idea I pulled from that book was to track my losses where I made a mistake. So, you know, not the losses where it's like, oh, the setup just didn't work, but the losses where either I played it too large from the start, I didn't cut a loss, I added to a loser, you know, outside of my plan. And I, you know, having it actually, you know, not on paper, but on a spreadsheet, like physically seeing it and tallying how many times I made these mistakes in a month, that gave me something to work towards. Like, okay, this month I didn't cut losses 5 times. Next month I've got to beat that number. And that was, you know, that was huge, and that brought me back. And I really haven't had problems with that since.
He also wrote The Psychology of Trading, which is a great book. I'll post links just below this video so that you can read them. I'll talk about my lowest point where I frankly lost $500,000 plus on a longer term investment. I didn't realize the difference between longer term investing and trading at the time. I bought into an illiquid penny stock. I couldn't get out even if I wanted to. I got stuck. I was actually right about the technology, print at home. Ticketing turned out to be a big thing. The company went bankrupt. I lost all my money, all the money in that investment. I lost roughly 35% of my hedge fund. But it was a gut punch to me. I lost all my industry credibility. If you read about me on the internet, people still talk about this, even though this was over a decade ago. It forced me to learn rules. And that's why I think losses are good. So if you are losing, or if you do have big losses, it forces you to reevaluate everything. No one reevaluates when they're succeeding. Even if they could be succeeding more. Let's say some people out there are like, oh, I've made $2,000. And I'm like, well, if you studied, you might have made $10,000. But they don't want to reevaluate because they're still winning. Losses can become your best teachers because they force you to like look at yourself. They force you to be like, I don't want this anymore.
I don't know if I've ever asked you this, but did any part of you want to like quit after that happened?
100%. Yeah? I drank a lot. I was really down on myself. But the thing that saved me was that there were still more and more plays. So even though I had lost, you know, roughly 35% of my money, I was like, well, let me try to get back on the horse. And when you try to get back on the horse, you don't go all in. You don't go big. Like you're like, is it broken? Is my luck out? Like I didn't even know that I had rules back then. I didn't have it all crystallized. I was just like, this pattern, you know, no one had taught me. I'm self-taught. So that kind of sucked. But I started going back into the trades that fit my patterns, and I started making money more than losing. And I was like, okay, the world isn't so bad, you know? As time passes, as you see more and more plays, you start to realize, like, there's always going to be plays.
Oh, yeah.
Whether it's every day or every week or every month. I mean, different markets have different opportunities.
For sure.
But that gradually got me out of my funk. And then, because I had lost all my industry credibility and so many people were talking shit, that made me even more pumped. So I appreciate the haters. I appreciate the doubt, because then I was like, I started getting angry. I started like, you know, like people were saying, you know, I had my TV show Wall Street Warriors had just started airing right as my fund lost 35%, and everyone was like, oh, your TV show ruined you. They didn't know that I was already in the investment before the TV show. It was just a timing displacement. TV takes like 9 months to air. So I was really angry that people were saying these things that were inaccurate. And then when the TV show started airing, people were saying, you can't short sell penny stocks, this is illegal. My broker says you're a criminal. And I was like, you just have to find shares to short. So a lot of things happened all at once for me. But aside from the TV, aside from the industry stuff, like I saw the plays and I kept making money more times than not. And then I restarted with $12,000. I went into teaching. Everyone thought that like no one goes from hedge funds to teaching. Like there was a Reuters article, failed hedge fund manager tries again on the internet. But then I became the #1 ranked trader on Covestor. I turned the 12,000 into 200,000. So I think that you get a lot of confidence from the process, from correctly applying these rules and just succeeding over time, even if it's not as quick as you might think. Like 12,000 to 230,000 sounds amazing, but it took me 3 years to do that. Okay, showing every trade and, you know, building up my blog and stuff like that. So you have like these kind of delusions of grandeur, I think, where people think, oh, I'm going to make 6.7. And when he's made 6.7 million, like he just said, there was a year where he did nothing. And that was after he had already made millions. So it's not like, okay, you made nothing for the first 9 months, then life has been easy ever since. You have to constantly be adapting. There will always be up and down periods. You know, you made nothing for a year, but maybe you would have lost. What if you had lost $1 million after making 3 or 4 million?
Yeah.
That's going to happen sometimes too. You're not just a grandmaster and you know everything and you're like Neo and you can just fight, you know, Agent Smith,
yeah,
is that
Smith.
his name? Smith. At the end, and he's like, I can see the code, and it's just like he'll never lose against Agent Smith again. How do you always adapt?
I mean, you're just constantly working. Like,
well, if you have the right
tracking
mindset.
things. Yeah. Like,
so you can never just like take like, you know, a year off.
I mean, you could, I guess, but you kind of have to have like the start from scratch mentality when you came back. Like, you know, ease your way back in, see what's working, see what's not. I'd be tracking for sure when I start up again.
But you have taken weeks and even months off.
I have, yeah.
How do you do that?
I was on a boat all of January. I didn't trade. Like, I didn't
Tough
have
life.
internet. Yeah.
How do you do that? Like, how do you come back from time off? I wanted to ask
slowly,
you
usually. Because I don't want to have a long break and then come back and lose a bunch of money in the first couple of days and then, you know, put myself in a really nasty mental situation where I'm like, oh my God, I've got to make this back.
So I think it's kind of like an athlete who gets injured and then they're coming back from like Tommy John surgery or something and they don't come back and they're like an all-star immediately. Like they have to get confidence, they have to go to rehab every day. Like
I ease my way back
therapy.
in, for sure. Every time I take a break, I ease my way back in.
Gotcha. So what do you think about people who, you know, maybe have taken a break and they can't get back into it? What is their problem? Because I get this message a lot.
Can't get back into it how?
They can't find their groove again. Maybe they've made
like
money
they
in the
come
past.
back and they're like kind of getting shopped around, they're not making much.
Yeah, they're just like, you know what, I had it once and they thought it would be like riding a bike and they thought they could come back, but what are they doing wrong?
I mean, market conditions do change. So I think that you can either like hang your head and give up and say, oh, the market's hard now, or, you know, make a spreadsheet, track a setup, look for a new angle, and just trade small till you start to figure out what your edge is again.
So that was my point. That's what I was going for.
Yeah.
You don't have to go all in, and first of all, you should never go all in, but you don't have to go back to taking full positions right away. You can modulate. This isn't like a casino. Like casinos, black or red. You double your money, you lose everything, like whatever. It's very simple. It's binary. With this, let's say before you're buying 1,000 shares, and not even if you took a break, but let's say maybe you took a loss and your confidence is shaken. Before you were buying 10,000 shares on every trade, you can buy 500 shares and see how it goes. You can take a 5% of your former position size, and then maybe if you get confidence, then start taking 10% of your former size, maybe 20%. Maybe you try a pattern and it's not working. So forget about taking time off, forget about any losses. Let's just say you're riding high, you're doing well, and then you stop doing well. This is what happened to me in year 2000. I made $700,000 plus my first 4 months when the NASDAQ was going from 2 to 5,000, just buying penny stock breakouts. The last 8 months of the year, I lost 10,000. There were no more breakouts. I forced myself to adapt and I learned short selling. And then I made a few $100,000 in 2001, 2002. So you always have to adapt. And I wish you could talk about that just for a second. Like, how often do patterns change? How often do you have to adapt?
Oh, pretty often. I mean, I was primarily an OTC trader, and OTCs were great up until all the major promoters got shut down.
Yeah.
Then we had that little like brief weed stock boom, and then there was like just a 6-month winter, like nothing. Like my OTC scanner was like I'd like never seen it before, but I would have no stocks on my OTC scanner.
And right now, there's not that many OTCs.
It's kind of slow right now too, yeah. But like they come and go in waves. They come and go in waves.
But NASDAQ is crazy right now, and we're filming this in the summer. Each of the past 3 summers has just been like crazy. Like usually you can take like July or August, like really wind it down. Every day there's like 100 or 200% winner. It's crazy.
Yeah. Like I mean, even if you have your niche with 2 or 3 setups you're really comfortable in, I always encourage like learn a 4th on the side. Like have something to fall back on if things get slow. I mean that's super important. And to jump back to your point about like you do go through those periods where you struggle and like easing back in after that or learning a new skill. we talked about my year-long period where I really made no money. Like I had to ease my way back in after that. Like I documented this whole thing on YouTube. I did like maybe 10 months worth of monthly recaps. Where I sized myself down so far. Like
how does your ego take that?
It was hard. It was difficult because I went down to like I can lose no more than $1,000 on a trade. Like that was the number I gave myself.
And what were you before?
And before I don't think I'd thought of risk quite that like black and white. Like that was part of my problem, was that I was like so much of a gunslinger, and I'd seen so many times where I was like, oh, I just got stubborn, but it worked.
What was the tweet that I remind you about all the time?
That I was gonna drop the hammer on Lake.
He was like, this is make or break. I don't care what the stock does. I am betting against it. Time to drop the hammer. And I think I texted you or what, and I was like, whoa, like calm down.
You were worried for me.
Never drop the hammer. Never drop the soap in jail. Like, come on, like you will get screwed. Like, I don't want that. So how do you come back from that? Slog mentality.
It really is slowly, and it took a lot of discipline because I did have to size myself way down, and it was hard for me because it was about practicing good habits. It was about correcting all those mistakes in my loss journal that I was keeping, and every month that I improved, I was allowed to size up a little bit. Those were my rules for myself. But like I think it was like January 2016, one of my first months in this process was like a $10,000 a month for me. And like I had like I think my best month in my career up to that point was like $290,000. So like that is like mentally difficult to like step back like that. But it was about the process. It wasn't about the money. And now the process, I mean, I've had a couple $400,000 months now.
I've seen that.
Like, I mean,
you had two $400,000 a month, like two back to
November and December during like that whole Bitcoin craze. I think I had like a 500,000 month and a 400,000 month. And then June was just a 400,000 month.
Gotcha.
But
and you took months off. How many months have you taken off this year already? Have you taken 2 off?
Like 1.5 or 2.
1.5 or 2. And you're already what up this year? Like 1.5?
I think I am like over 900 now.
Okay.
900,000.
Oh, okay. Oh, you're not even at $1 million?
No, I don't think I've quite hit $1 million on the year yet. Yeah.
Weak.
Yeah, so weak.
I'm kidding. That's amazing.
But it's you've got to keep the marathon, not a sprint mentality. I think that's really what it is, and keep reminding yourself of that. Like you sit through those slow months, sit through those months where you have to like go back to square one and reset yourself. You're doing this for future you. You're doing this so that the huge months are possible later. You can't want it all right now, because if you put that pressure on yourself where you've got to make a record month every month, like you're going to do something really dumb.
Why do you think traders, I know a lot of traders, they take a month off, they take a week off. Some people don't understand it. Like some people message me, I'm still working, I'm still doing my watch list and commentary every day, but there are weeks where like I just don't see any great trades or I don't trade. Why do you think that's necessary for traders? I think it's necessary to take some time off.
Because this is really mentally taxing. It is like you get exhausted, you kind of reach a breaking point. And it's funny because this is something else I had to work on. I would get to that point where I was like, I could tell like I'm getting mentally fatigued. I'm starting to do dumb things because I've just been trading day after day after day. And then it would ultimately, it would lead to like a big stupid trade where I would take a dumb loss. And then I would say, well, there's my dumb loss. I've got to take a week off now. And I finally got it to the point where I can recognize and step away before I take that loss.
That's awesome.
But trading's addicting, so it's hard. It's hard to force yourself to step away. But after like 3 or 4 times of that mistake, I finally got it.
Yeah, especially when there's big money, like, you want that money, you have money in your account, you have the knowledge, like all you have to do is press a little button, but you have to control that button. With that great power comes great responsibility. And we have all felt that burnout. Like I see you, Stephen Ducks, Mark Crook, Michael Good, myself, we're like too many plays, too little sleep. Like you have to understand, this isn't just like fun. We're not just like, oh, buy, sell. Like we're looking at these patterns. That's what I want you to understand from all of this. Like this is so much work, and it's a beautiful work, and we're able to go everywhere, and I'm very blessed and fortunate. We're here in Italy celebrating my mom's birthday. I flew them out, first class. Like it's beautiful to be able to do this, but it takes a lot of effort.
And really, like the more size you trade, the more stressful it gets. And I'm kind of in this little like mental rut right now, like where I will see guys like Ducks who are trading like 5 times the number of shares I am on a setup and killing it. And I'm like, you know, I should be able to do that too, but like, I'm at this point like where I just know like emotionally I can't handle that right now. Like I can't push that kind of size and sleep well at night.
And so you really have to recognize that. You have to be introspective and think about like how is your mental like well-being right now? Like there's no off season. That's the thing. Like with sports, okay, you train in the off season, you get better for the on season. It's very nice. Stock market, usually we've had summers off, but not lately. Not in the past 3 fucking years. Like I've been begging for a bear market. I've been begging for time off. I'm already like long far gone, but I also trade with small size, which makes it a little easier. I wouldn't be able to teach and trade with big size. I would be totally gone. Final thoughts. Okay. What do you think people need to hear to A, get them on the right path, B, give them the right mentality, and C, have them succeed where 90% of people usually fail?
I mean, sort of like we just mentioned, it's a marathon, not a sprint. You've got to come into this with realistic expectations. People sign up and they have the like, all right, it's day one, I'm gonna make some money attitude, and that is not realistic expectations. You are signing up with the mentality of like, it's day one, it's time to learn. It's time to like learn about myself, it's time to learn the patterns, and it's going to take a while. And then again, to go along with that, you know, since you're not trying to make money early, you're trying to learn early, you have to trade small early. You have to only trade what you can afford to lose, what you can easily recover from some sort of outside job.
Well, what about with their parents and friends and family? Say penny stocks are all a scam, you're falling victim to a scam, and you want to show that it's not a scam by making a lot of money. How do you respond to that?
Ignore the haters, I guess. Like there was a time I would try to like argue with people on Twitter and stuff, and now I just like immediately block them. Like I just don't care anymore. Like,
you can't change some people's opinions. You know, penny stocks are like universally hated.
You've got to ignore the outside noise, like whether that's, you know, people hating on you or seeing other traders making more money than you. Like it's all, focus on yourself, focus inwards on your own process.
Ooh,
because
can you say that with an accent? Like
I don't.
You must focus inwards.
I'm not gonna do that.
Be
but
like
no. You that's your department.
You must be one like flow like water.
That's your department, Tim. But really, like it's such an internal process, and anytime you start to get down because of people hating on you or seeing other people doing better than you or whatever it might be, you know, just focus on having yourself take one step forward. That's all you can do.
This is you versus you, FYI, okay? I know that we share all this stuff on social media, but this is really like a personal journey, and you're gonna have to like battle your own demons and the addiction and, you know, the ups and downs, but it's you. And for me, I love sharing it on social media. I encourage people to share it on social media. I think it keeps you more responsible. Like, I don't want to look like a dumbass in front of my followers, so I follow my rules better. So thank you guys for helping me stay more disciplined, because I'm a trading addict. But at the same time, you can't let others, whether it's your friends, your family, social media, get you down, because this is a journey and you're on it. And, you know, only you can take it as seriously as you want. Like, we can say take it seriously, enjoy the marathon. You can quit at any time. I don't encourage it. I think that's wasteful, because there's always going to be a market. There's always going to be opportunities. I think that you will get it, whether it's year 1, year 2, year 3, year 4. I don't think I've ever had anybody like who's even like the dumbest person in the world. They've never like said, oh, I'm in year 5 and I don't get it. But at the same time, I understand you have life, you have pressure, you need income. It's got to be about you. And we make these videos to share our own personal journeys, to help inspire you, to show you what we've been through. But it's different for everybody. You might become a short seller and evil like him. You might be, you know, a positive person like me and focus on buys. I'm just kidding. It's not evil to short sell. It's not evil to buy. Make the stock market work for you and your schedule. You don't even have to be dedicated all the time. I have a lot of part-time students. They trade like once a week, maybe twice a week, and they make an extra $100 or $200 or $500, or they try. Maybe they're not even trading, but they're learning in an extra hour or 2 per week. So that's today's lesson. Leave some comments underneath this video. Let's see what you think. I'll post some links to Tim Grittani's great DVD Trading Tickers, to some books that you should read. The more that you study, the more that you prepare, the better your odds of success. You cannot over-prepare in this game, okay? You can very easily under-prepare. The stock market is a battlefield. I want you prepared. Come to the battlefield with the best weapon and fucking annihilate the field. Thanks again.
Yeah, you got it.
I almost forgot to mention why I'm wearing this shirt. He has this shirt that says chill out. right? Because you're a chill guy. Why do you think I'm wearing this shirt? Do you know what UMBC is?
They're the 16 seed.
The first 16 seed to beat the #1 seed in the NCAA tournament. Are you a fan? Are you guys fans?
They killed my bracket. No.
I'm sorry that they killed your bracket, but this is a beautiful, inspiring story. And they're such a small school. I ordered this shirt, I ordered a hat, literally like within 5 minutes of the team winning. I didn't even get it delivered for like a month because they're so small and inefficient and, you know, tiny. But it's awesome that a number 16 seed can take out a #1 seed. Why does this matter? Because what he's done seems impossible. $6.7 million on fucking penny stocks. What I've done, nearly $5 million in penny stocks and now 5 millionaire students. It seems impossible, but it's not with enough work in the right mindset. In UMBC, I don't know, did you see the player interviews or the coach interviews?
A little bit, yeah.
I'm a little obsessed with them, right? They all believed in it. It didn't matter if the whole world counted them out. What was it, like 97-0 or like 120-0 before that?
Oh, yeah.
Like literally dozens and dozens and dozens of examples. Not one team had ever taken out a #1 seed, but they did it. And let them be an inspiration to you. Because before us, no one had ever shown exactly how to turn a few thousand into several million. Like, it was like, oh, maybe you get lucky, maybe you invest in one penny stock or whatever. No one had ever shown the process. And as we create more and more successful students, more and more 16 seeds will beat #1 seeds over time. Because this is kind of a long shot, and to make 6.7 million, you know, let's be honest, it's a long shot, right? Most people will not make 6.7 million. They're not going to make 5 million. But that doesn't mean that it's impossible. If you believe in yourself, you could be next. But it's going to take a lot of work. It's going to take a lot of effort in the right mindset. So I just wanted to add that because your story is amazing. But at the same time, a lot of people watching this are like, that's nice. That's nice for him, but it's never going to happen to me. It can happen to you if you are willing to do the work. It will never happen to you if you're not. If you just say, oh, it's not going to happen to me, I'm not going to do the work, that's nice, but it can. Because I'm just an average guy. He's an average guy, okay? Look at his fucking t-shirt. Look at my shirt. We're not like mad geniuses. We're not like in some, well, I guess we are in a fancy place, but I don't know. That's my last closing thoughts. Cheers. Hey, Tim Sykes, millionaire mentor and trader. Thank you for watching my videos. I hope that they help you. I want to share everything that I've learned over the years. You can check out more videos right over there. And also click subscribe so that you can watch all of these videos, get that knowledge, and become my next millionaire student.